Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 9th of December 2020, and we're looking at some forecasts for gold in 2021, and an interesting article published encapsulating these forecasts. So let's take a look. Over the Christmas break, we shall be publishing our own 2021 forecast for gold and silver. Interestingly, though, there are firms already making their predictions. In fact, a number of them over a month or so ago. Now, we came across an interesting article published by Capital.com, which encapsulates some of the more vocal institutions' thoughts on the gold price moving forward. Now, the article, to be fair, explains quite neatly what has happened this year to the gold price and has provided a useful précis of those who have forecasted the prices for gold in 2021. So let's together go over that article. Capital.com article, dated 18th of November 2020. Headline: Gold price forecast 2021 and beyond. Could the metal go past $2,000 again? 2020 can be described as anything but a stable year. The global COVID-19 pandemic, the stock market's historic Black Monday and Black Thursday, the Russo-Saudi Arabian oil price war, the ongoing Brexit saga, and a rather hectic US presidential election. A lot can happen in one leap year that isn't even over yet. With rising political and economic uncertainty, gold has become a go-to asset for many investors looking to reduce the risks and diversify their portfolios. But the question now is, after setting fresh records this year, will gold prices go up past $2,000 per ounce once again anytime soon? Should you stock up on this precious metal heading into 2021? In this article, we recap the commodity's performance so far in 2020, check out what factors drive its value today, and review what the latest gold price forecast looks like according to analysts. Gold price analysis for 2020: uncertain times fuel stellar growth. After losing much of its shine and falling below $1,200 per ounce in 2018, gold had a splendid recovery in 2019, surging by almost 20% and closing the year at $1,519 per ounce. The rally continued into this year, with the commodity rising to $1,672 per ounce by February 24th. In mid-March, the broader market sell-off saw the gold price going down to trade at $1,477 per ounce. The metal then quickly hiked past $1,700 as low interest rates and unprecedented economic stimulus boosted investor interest in safe haven assets. The gold market dipped in early June, only to break through and reach all-time highs later this summer. On August the 6th, the metal hit $2,070 per ounce, soaring 35% since the start of 2020 and 40% from the March lows. The growth was driven by the weakening US dollar and a number of significant geopolitical and economic events on the global arena, such as the EU's agreement on a €750 billion, equivalent to £670 billion or $890 billion, coronavirus recovery fund, and the closure of the Chinese consulate in Houston, US. As the dollar started to pick up, the metal retreated to trade between $1,900 and $1,950 per ounce in September. After dipping to $1,865 in the last days of October, a solid increase in gold prices followed on the back of the US presidential election turmoil, with the commodity peaking at $1,960 on November the 9th. However, the subsequent Pfizer COVID-19 vaccine announcement pulled the market lower to trade well below the $1,900 mark. At the time of writing, November 17th, the precious metal traded at $1,879, a near 25% gain year to date. But will the gold price rise even higher before this year ends? And what will likely set the direction of gold future prices? Gold outlook, factors to drive the market in the weeks ahead. Before diving into the gold forecast 2021, we want to quickly recap the latest trends that might drive the value of the metal going forward. It is no secret that gold prices tend to benefit from the rising uncertainty, whether in the economic or political arena. This year was no exception. To hedge their portfolios, investors have run to the metal, adding it to their holdings in all forms and shapes, from gold bullions to gold stocks to exchange-traded funds, lifting the commodity's value higher. Among many issues, inflation has become one of the market's worst fears in 2020. As governments across the world have been trying to compensate for the damage done by COVID-19, trillions of dollars were pumped into the global economy through fiscal stimulus and quantitative easing. Based on the research from McKinsey, this year's stimulus has already exceeded the measures taken during the 2008 and 2009 global crisis. And then we have a graph here of the value of COVID-19 fiscal stimulus packages in countries as a share of their GDP as of October 2020. And you can see Japan is the highest, then Canada, Australia, United States, Turkey, Brazil, Germany, China, India, France, Argentina, and Italy. During times of monetary easing, investors tend to switch from the US dollar to gold as the hedge against inflation, also adding to the value of the precious metal. Another important factor that will determine gold price in the future, at least in the near term, is the coronavirus itself. The second wave has already hit the world, with the number of cases rising daily and many countries reinstituting lockdowns. This in turn weighs negatively on already struggling economies. If governments decide on a fresh dose of fiscal and monetary stimulus, the yellow metal could continue being the big beneficiary of the COVID-19 crisis. So will gold keep going up? Well, if the global economy continues to stagnate due to the pandemic and rising geopolitical tensions impact already disrupted international trade, we might see the price of gold climbing higher and even breaking its previous records. Earlier this month, Samuel Berman, an analyst at Capital Economists, wrote in a note that if, quote, there will be a rapid recovery in economic activity due to the vaccine, there will probably be some further selling of gold-backed ETFs, unquote. However, Berman remains positive about the metal over the longer term. Quote, while the positive developments in finding an effective vaccine against COVID-19 have boosted investor risk appetite, we still think that gold prices will remain high in the year ahead. All told, we think that persistently low US real yields will support gold demand and offset much of the weakness associated with an increase in risk appetite. As a result, we expect that the gold price will stabilise around $1,900 per ounce until the end of 2021, unquote. In their gold price forecast published recently, analysts at Goldman Sachs maintained their bullish outlook for the upcoming year, setting their price target for the metal at $2,300 per ounce. In our view, the structural bull market for gold is not over and will resume next year as inflation expectations move higher. The US dollar weakens and emerging market retail demand continues to recover. Near term, however, it may be difficult for gold to generate a meaningful momentum in either a higher or lower direction. Citibank is also optimistic about the commodity's future. In their latest gold price prediction, the bank's analyst said they see the metal rising to $2,200 per ounce in 3 months and to $2,400 per ounce in 6 to 12 months. Quote, we lift the 2021 base case gold price forecast by $300 per ounce versus our early July update to a record $2,275 per ounce, unquote, they added. In their note on the gold price 2021, analysts at Australian bank ANZ predicted the metal would rise to $2,200 per ounce by the end of 2020, and then hike further to $2,300 by early 2021. However, this valuation will likely mark a peak in the commodities rally. In the meantime, the gold expectation of Jim Steele, chief precious metals analyst at HSBC, sees the commodity at $19.65 per ounce in 2021. Quote, "We're looking for strength in the early part of the year, maybe more moderation in the second part. But don't forget that's an average, which means that the market will likely stay at about 2,000 for some time and sometime under 1,900. Unquote. Answering the question, why is gold going up now, Steele noted, most gold rallies are supported by two features, debt and liquidity, and some varying degrees of one, the other, or both. Right now, the gold market is the beneficiary, and has been for quite some time, of both debt and liquidity. And by that I mean we've had highly accommodative monetary policies going on for a very long time." Unquote. However, Steele warned investors gold is sensitive to geopolitical risk. If we're going to get some rapprochement on the trade issues between the US and other countries, and it's not just one country, it could be from several, and we also get a charm offensive from the Biden administration to US allies or to others, and the geopolitical risks come down, and there's progress made on the trade front, then that would be negative for gold. More bearish gold predictions provided by Trading Economics put the metal at $18.52 per ounce by the end of this quarter, suggesting it drops to $17.49 in the following 12 months. On the other hand, based on the opinion of Wallet Investor, an online forecasting source, the metal is expected to end 2020 at $1,891 per ounce, 2021 at $2,124, and 2025 at $3,048 per ounce. Speaking of the gold price 2021, analysts at Heraeus Precious Metals explained, quote, "A worsening pandemic situation will mean a weaker economy, and that seems to have triggered selling in the financial markets. Gold was not spared from the sell-off. The gold price has had a strong inverse correlation with US bond yields and real interest rates, which have begun to rise. Short term, the price could fall further, but gold's safe haven status should provide some support." Unquote. The bottom line, is gold a safe investment? So, will the gold price increase? Although nobody has a crystal ball to answer this question, the majority of forecasts now point towards the metal performing steadily well into 2021. However, while the current gold price projections might generally be bullish, it is important to remember that global financial markets remain highly volatile. For that, predicting what the gold or the price of gold will be in a few hours, or especially giving long-term estimates, is rather difficult. As usual, we recommend you consider the latest market trends and news, technical analysis and expert opinion before making any investment decisions. If you think you're not ready for long-term investment commitments, but still want to ride the wave of market volatility, you can do so through contracts for difference. So we've seen that the general consensus for 2021 so far is broadly between $1,900 and $2,300, with most of them forecasting really somewhere in between. No mention of $5,000 gold or $10,000 gold, but prices similar to what they are now, or some 10 to 20% higher. Now, of course, as the article points out, no one has a crystal ball. Well, an accurately functioning one, that is. But it is important to bear in mind we shall see other forecasts coming out over the next few weeks. Now, we've already published a video entitled $1,000 Gold Next, Not $5,000 by Harry Dent, where Harry Dent sees gold falling and then regaining new highs, but being quite firm that we're more likely to see $1,000 gold before we see $5,000 gold. And even then he predicts he's unlikely to see $5,000 gold in his lifetime. And we've placed a link to this controversial video in the description box below. Now, it'll also be quite interesting to see the predictions of Schiff, Maloney and Morgan, whom for years, if not decades, have been consistently wrong in their imminent dollar collapse forecasts and gold and silver shooting to the moon. And yet, in fairness to them, they have more followers than we have. But there again, let's be honest. You're more likely to follow those who tell you that your dreams will come true before you follow those who tell you it as it is. So if you're listening to this, congratulations. You really are the 1% of the 1% of the 1%, rather than the herd who just wish to be massaged with stories of overnight wealth any day soon. Now, we have to admit we're not quite as bearish as Harry Dent, and really never have been. He was correct in predicting gold would fall a few years ago, but he was quoting figures around $750, while at the same time our lowest base was $1,000. And in fact, it actually went down close to $1,050. For this year, we could not see gold, even in the most extreme of circumstances, touching 2,300. And it hasn't. And it'll be more interesting to see where it does eventually end up by the end of the year. Now, we shall be producing new videos on the various forecasts, but meanwhile, also wish to draw your attention to other important events occurring that will continue to affect the price of gold and silver moving forward. For example, yesterday we published a video entitled Bullish Silver Opportunities 2020-21, where the Silver Institute forecast an increase in demand for silver jewellery in 2021 and subsequent years thereafter. Now, you may not be interested in silver jewellery, but if you bear in mind that it makes up approximately 20% of silver demand, it's certainly not an area that should be ignored. And the day before, the greening of black gold implications for gold and silver, which highlighted why energy costs for gold and silver mining could rise short term, but may prove beneficial long term. And we've placed links to both of these in the description box below. What is worrying is that those viewing these videos are much lower in number than those who perhaps viewed our video when we said $100 silver. And of course, it feeds the argument that clickbait and or bullish sentiments are far more popular than reality. But when you're investing your hard-earned monies, when you're investing the inheritance of your children, perhaps it's more incumbent and more beneficial to listen, or at least, if not listen, but follow and hear those who perhaps are a little more credible or, shall we say, sober. And then you can make your decision appropriately. So, meanwhile, do let us know what you think is going to happen to gold and silver towards the end of the year, and also how you see it moving in 2021. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And also, do not forget to pop across to our Richard and Greg channel, where Greg and I have had further debates on other subjects. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.